Good morning. Welcome to Trading Together. I'm Mel Gacee, and this is Thursday, December the 11th. How's everybody doing today? So glad you're here with me. We had a big day yesterday with FOMC and the announcement of the rate cut. So the market got a nice boost yesterday. We got this nice pop up. And then overnight, we had some negative reactions. So what we're looking at today is we opened up with a drop down, a gap down from the overnight session. And then we immediately kind of we pulled up a little bit and then did a big drop. Almost hit our overnight low, which is this yellow line right here, but didn't quite. Then we turned around and did a whole V-shaped recovery and looked like we were going to go fill the gap there, but didn't quite make it. So now we're just kind of doing a little herky-jerky up and down right now. So a little bit back into this range. And I'll zoom out and you can see this range that we've been in pre-market for a good amount of time. So right over here at about 7:30 Eastern, we kind of started down, kind of came up. So this is all this area in here is then again, shortly after the open, we took the drop and the climb, and now we've kind of settled right back into the range. So progress, right? I'll take a look at the daily, kind of what that difference is. In fact, let me do that. I think I need to, let me share my others just a second. Take a look at the daily chart on this window right here. So let me make it a little bigger for you. Make sure you guys can see it. So looking at right now, I'm looking at this. As we've discussed in previous videos, the SPY over the S&P 500. The S&P 500 being the index of 500 stocks. So the S&P 500 is holding the basket, holding 500 stocks. The SPY, so you can't own the basket, right? But the SPY recreates the S&P 500. It's an ETF, and you can own the SPY. So that's how we kind of trade. Now you can buy options on the S&P 500. You can't own it. So how we trade the S&P 500 by and large is through the SPY. There are other ETFs that are out there. VOO is one of them. A few ETFs out there for you to be the SPY, or the S&P 500, but the SPY by and large is the largest one. So this picture chart of the SPY, right now I'm looking at the 1 minute. That's what I'm in and out of trades really fast. I'm day trading, and that's what this stream is for. I'm going to day trade in front of you. I'm going to show you how it's done. And I'm also going to take this opportunity to teach you. So I'm really dedicated to helping people learn that are interested in trading. There's not a lot of people out there that are going to really take the time and help you guys learn. And that's what I'm going to focus on doing. So this stream will be some teaching, some analysis, and some live trading. Okay. So we'll look at the daily chart here so you can see where we've been and where we're going. Now it's a little busy. I've got a lot of lines on here, but you can see we created on the SPY an all-time high. That's back here on October 29th. We made an all-time high at 689.7. Yesterday, after we got the rate cut announcement, we had a nice boost up. Not only did they deliver the 25 basis point rate cut, but they also talked about, in essence, restarting QE, quantitative easing, meaning, in a nutshell, pumping more money back into the system, more liquidity back into the stock market. So by and large, stocks tend to like that. So we got a big push yesterday in the market, and we almost came up and tried to tag this all-time high. We got up as high as 689.0. We needed to get to 689.7. So that is still a target. That is still our direction. But today we had a bit of a pullback. So we opened up today lower than we closed yesterday. So that's called a gap down, and dropped down a good bit and then tried to recover. That's what we're doing right now, is trying to recover. So back to that minute chart, you can see that's what we're doing right now, is trying to make this recovery. So we're still working on that. All right. So let's go back to our minute chart and we'll talk about how to trade this. So let me open this up just a little bit more. And zoom in a bit on the futures. So in this window, I'm looking at the futures, the /ES. That's how they're known. The ES is the futures over the S&P 500. So SPY is the ETF over the S&P 500. The ES are the futures over the S&P 500. And then this is the S&P 500 itself, the SPX. So I'm looking at all three of those, and they're really going to run together. They're pretty much running in lockstep. You can see them all. Has to be done deal before the option expires, and these are going to expire today at the end of day. So we don't have a ton of time when we trade 0 days expiration. But my style of trading is fast. So I'm in and out usually a few minutes to a couple of hours. Don't want to hold any of these options to the end of the day because they're going to move toward worthless, regardless of what the stock does. So that's where options, I think, leverage your money just a little bit better. Now, there's all different types of trading. There's long-term buy and hold, which isn't really trading at all. That's longer-term portfolio management. I recommend that for retirement accounts. I recommend a chunk of your money is invested in safe, longer-term investments. But there are different styles, right? So that's the longer-term investing. I'm doing day trading. So there's a whole range, right? So between long-term buy and hold and what I'm doing, scalping by the minute or seconds, there's a whole bunch in between, right? So you can buy and hold, or you can trade on a longer term, in and out every few months, or you can trade every few weeks or every few days or every few hours, or in my case, every few minutes. So there's a whole big range of different trading styles. I'm just representing one trading style. There's a whole bunch out there, and this may not suit you. Maybe the in and out, the quick trading may not suit your personality. It might. Some people really like it. I love it. It's makes sense to me. I'm moving my money in and out of the market several times a day, and I'm usually profitable. I have a pretty high win rate. All right, so that's kind of an explanation of what the trading overview of what the trading options does for me and how I do it. So again, right now you can see this chart. We're looking for a trade, and as I'm speaking to you, trust me, I'm watching these charts. I'm keeping a very watchful eye. There is no trade right now. We are in a range, and until we break this range, there's no trade, not for me. We've got these green lines are representing the opening range. So every day I mark off our high and our low the first 15 minutes of the range. So that's what these green lines represent. And this is where we're sitting right now. We're just sitting inside this opening range, which of course, as we discussed, is the same as this range that had been forming pre-market. So as we kind of wait for this to play out and give us a direction, I'm going to be talking about just some things that people who are first starting out need to know. So let's start talking about, actually, I need to get out of the position here. I'm making 25%. Yes, please. Let me get to that real quick, and then I'll be right back with you. All right. I'm out of that position. Thanks for your patience. I had a long position on UNH, which is United Healthcare, and that stock has been climbing. So I just took a 20% win on that. That was nice. Okay, so back to, let's talk about the basics of trading. What do we need to trade? We need a brokerage account. Now, there are several brokers out there, and you can take your pick. I'm using Charles Schwab, and I'm using Thinkorswim. That's what this charting is built on, is Thinkorswim. It's a great platform. It's been around for many, many years. It's got a lot of strength to it. I like it, and I'm pretty familiar with it. But you don't have to use Thinkorswim. There's a lot of good platforms out there. Let's see, IBKR. I don't recommend Robinhood, although a lot of people use it who are beginning traders. It's just not my favorite platform. They're a little, I don't know, a little sketch if you ask me. But that being what it is, they're a big player in the market, and it does work for a lot of new traders. So IBKR, Robinhood, Trader, what's the one? Trade-of-8, I think, is another one. Trading View is another one. Fidelity has one. I don't recommend their platform. I don't think it's super intuitive for traders, but there's certainly a very, very stable, large company, right? So the first thing you need is a brokerage account. So you're going to need to open a brokerage account, and you're going to need, if you're going to follow me or follow options trading, you're going to need approval for options. So the broker reserves the right to allow you to trade options or not, as trading options can be considered risky. So when you go to open up your brokerage account, it's going to ask you if you want the ability to trade options. If you do, then you're going to go ahead and fill out an options approval request. And in there, it's going to ask you, basically, they're going to make their decision based on how long you've been trading options and what your experience is. So you're going to fill out your approval request, open up your account. Usually that whole process takes no more than 1 or 2 days. Once you have your account, brokerage account opened, at least on Charles Schwab, you can trade without any money. They have an option to paper trade, meaning basically trade in a virtual account. I would recommend that for any beginning trader. Paper trade in a virtual account. Don't start off right out of the gate putting your hard-earned money on the line until you're comfortable with what you're doing, until you've developed a strategy or you've found someone that's going to help you develop that strategy. So when you open that brokerage account, you get your options approval. Go ahead and paper trade that for a while. Now, I will say this, a big portion of trading is managing emotions. You're not going to feel the same emotions in a virtual account as you will when you have real money on the line. So it's not truly going to give you all the experience that you need, but it'll at least give you the mechanics, how to place the order, how to get in, how to get out, how to check your profit. You know, how do you work this strategy? How do you read these charts? So all of that is really important learning. And I recommend doing all of that with a paper trading account. Eventually, as you're comfortable placing the orders, as you're comfortable building a strategy, you're feeling confident, then you can move into actual trading, a live account with a small amount. Again, step by step, let's walk before we run. So many people that I coach want to jump in there. They want to take, huge trades. They're not quite ready for it. And sometimes that's just going to blow up your account. I hate to say it, but it does. So let's walk before we run. So open that brokerage account, get your options approval, and start your paper trade. And follow me. I'm going to give you trades, hopefully every day. We don't always take a trade. We don't always have our right setup, but hopefully I'm going to give you a trade every day that you can follow. So let's talk about how I do that. When you follow me on this stream, again, my goal is to teach you, to help build up new traders, and to give you something to follow along. I'm going to trade in front of you. You can see what I'm doing. You can monitor my results. And I'm telling you, there are not a lot of traders out there that are as transparent as I am. So when you follow me, this is what it's going to look like. So as I said, right now, there's no trade. I've got no setup here. But if I saw a setup that I liked, I would say to you all, okay, kind of like where this is going. It looks like we might be getting ready to take a call. Remember, calls do what? Calls go up when the market goes up. Puts make money when the market goes down. So right now I'm looking at this chart and I'm saying, all right, looks maybe like we could be pushing upward. That's great. Let's talk about getting into a call. So I would come over to my options chain on Thinkorswim. It's under this trade button. I'm going to come over to my options chain. I'm going to look at the calls and I'm going to say, I'm going to look at the calls on the 11th of December. That's today's date. I'm looking for today's expiration. Now remember, that is risky because this thing is going to expire worthless at the end of the day. Remember that. It's a riskier trading style, but I'm not going to let this thing go to 100% loss. The most I'm going to let me or you lose is 50% of what you paid for this option. So again, this option is the first option in the money is the 685. So the strikes are listed down here in the middle, 685. The calls are on the left, the puts are on the right, and we are looking at the first strike in the money, 685. So if I were to take this trade and if I were directing you right now, I would say, okay, guys, let's look at the 685 strike. And I would call it up and I'd have an order here ready to go. That's what the order looks like. I'm going to put my order in at the market and I'm going to change my quantity for whatever amount I think makes sense for me, for my account. Now let's talk a little bit about the difference between market and limit. Those are your basic two order types. There are others, but those are your basic order types, market and limits. A limit order says, I do not want to pay more than this amount. This is how much I will pay. I won't pay a penny more. That's a limit order. Market order says, I don't care where it's trading. Fill me right now. I want to buy it. So I don't recommend market orders in most scenarios. I don't recommend them in most scenarios. If you're getting into spreads, if you're getting into a thinly traded stock, if you're looking at penny stocks, if you're buying and holding something, I don't recommend a market order because, again, market orders are saying, fill me right now. I don't care what I pay. In this case of trading the SPY, because it is so liquid, meaning there are so many people trading the SPY, there will always be someone on the other side of my trade. So I am not worried about a market order because, number one, the spreads are small, so I'm not going to get stuck. And there's someone on the other side of my trade for when I'm ready to get out. That's not always the case on other types of trades. So again, I don't recommend market orders for other types of trades, but I do use market orders for this type of scalping only. Okay, so let's go back to that options chart. And that is my order setup. I have it automatically set at market, and I can manipulate this quantity for however many I like. Now, again, this particular option is trading at $1.28. So if I were going to take this trade, one contract would cost me 128. If I were going to get in 5, 6, 7, 10 contracts, that if I got 10 contracts, it'd be 1,200, right? So this is where I manipulate my quantity, and that is what you're going to want to do as well. If you're in a small account, if you're just starting, keep it low. Just go with one contract. After you paper trade, right? Paper trade first. So I take the order, I would hit the confirm and send, and then I would send it, and then I would have it show up on my monitor screen where I have my profit and loss statements. Shows me what's open, what's in profit, what's in loss. Okay? All right, so right now we are getting a little pulled down to the VWAP. Remember that VWAP is the area that I'm watching for direction. We came down and broke the VWAP earlier, but then we bounced right back up. So right now we're breaking the VWAP again. Let's see if we can stay below it, and we could consider a put, right? Puts are when we think the market's going down. If we buy a put, it's going to make money. And that's the beauty of, another beauty of options trading is you can make money when the market goes up or down. All right, so here's our cross below the VWAP right here. Could we trade some puts? Maybe so. Puts 685 is the strike I would be looking at. I'm loading those right now, considering that trade. We are hitting a previous low, so I'm going to give that a second to see if we're going to break that low or turn and reverse to the upside. Here's the low I'm talking about. We did hit this low right here, and we just tagged it, and we're getting right now a little bitty reversal. So let's see if that continues down or reverses back up. If we just get a little touch, what they call a look below and fail of the VWAP, then we may consider calls again. And we do this, right? When we're scalping, we pivot back and forth all day long. Okay, coming back up over the VWAP. So again, same as before, look below and fail. So we looked below the VWAP, we failed it, we came right back up. That is what we're doing right now. Looked below it, came right back up. So we did not take that put yet because we were waiting for the confirmation. So if this continues back up again, we will pivot to calls. I'm going to go ahead and load some calls up here. The 685s are the first one in the money. And again, a little bit of a failure here. So just kind of toggling back and forth right here at this VWAP. We need to figure out what the true direction is, because right now they're just playing at the VWAP. So we don't know what the true direction is. What we do have to help us is the MACD. Of course, the VWAP helps us, and the moving averages help us. So right now the MACD is red, meaning we're a little bit bearish, but it's also giving us a shorter candle here that tells us we might be reversing to the green side. All right, another little bounce at the VWAP. And the MACD is starting to shorten up a little here. Let's see if we can get it to flip to the upside for a call. So again, I do have the calls loaded, ready to go, but I'm not in anything yet. And again, it's because we really are still stuck in this range. All right, nice little push here. I like that. And remember, 90% of trading, even fast trading like I do, is patience. Waiting for the right setups. We've got to be patient when we trade. That's huge, absolutely huge. All right, MACD rolling over, turning a little bit green here. We are still in the range. Do we have enough room to make this trade worth it? Maybe. Maybe. My Fiserv trade just sold. I had a limit on that. Made 20%. That was nice. All right, so we did get some volume on this last bar. All right, I'm thinking I might try the call here. The 685s. I'm not in it yet. All right, I'm going to go ahead and get in. Punch it, I'm in. And I'm looking for just a small win right now. Up about 3%. Let's see if we can get it to hit this opening range. Just watching it. Just up at 1%, just flat on our profit. We just need a little push up through this opening range. Let me get that screen up for you so you can see what it's doing. So getting a little slow down right here, but I think we should get a push up here. Let's see if that happens. And if we tag this opening range, I may jump out at a smaller profit. Let's see how that plays out. Up 3% right now. Almost 4. Oh, little drop there. Right? We're getting up to that range. I'm at 6%. I'm going to get out, punch it, I'm out. And like I said, if we tag this range, I was going to jump out. 6% is okay for me. I'm okay with that. There it goes. Beautiful. And if any of y'all followed me, hopefully you got that win. Congrats. All right. Beautiful run here. We caught that call just at the right time, guys. Very nicely done. Now, what I'm looking for here is what we would call the gap fill, and I'll explain what that is. All right, nice little push. Gorgeous. We talked about the gap a minute ago, and I'll explain that. I'm in another trade that I'm watching. There we go. Just what I needed. Very nice. All right, I'm out. Well, not out. It's because I have an order pending. Let me kill that order. And then we'll talk about the gap fill. Or maybe I let that order run. Let's see. I have a limit order set on this. So maybe it'll fill. Let's see. Let's see. You can see the limit right here on my chart, right there where it says 4 limit. Let's see if we get there. Maybe we get there. Oh no, I need to kill that. That's not the limit I needed. All right. Wrong answer. Okay, I'm at 10% on this one. I'm going to close it. Beautiful. 13%. Gorgeous run. 17%. I'm out. Gorgeous. Okay. Very nice. All right. Well, guys, I have had a very profitable day today. And that was awesome. And it's still going. Okay, let's talk about gap fill so you understand what I'm looking for here. All right, nice run. Very, very nice run. I'm up a great deal in my account. That's excellent. Okay, so when we were looking at that daily chart, let me show you what the gap looks like. And let's do that on the SPX. You can see the gap better. And we'll look at the daily. Now, remember we said the gap is what is between today's open and yesterday's close. That is where a gap is formed, and it happens a lot. So if you look, let me make this chart bigger so you can see it. And I've got a lot of lines here, guys. I'm sorry. These are old support and resistance lines, and they will come into play again if we start to move down. At some point, we will start to move down. But in the meantime, it's a little busy. I apologize for that. Okay, these are gaps. Every place you see air between these candles, right? So here's candle, 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 green candles moving up, red candles moving down. Gaps are the air between the candles. So this candle on 11/25, so November 25th, this candle closed right here where my cursor is. And the next day, 11/26, we opened right here. Well, how do gaps form? They form because these products are running all night long. The SPY is running all night long. The ES futures are running all night long. So it's climbing at night, but the SPX is not. It is not running all night long. So the SPY is run all night long. It's run up, it's run up, it's run up. And then we open the next day and boom, we're up a whole bunch. That's the gap. Yesterday's close, today's open. Today, we had a gap. Now, you can't see it right now because that gap has already been filled. But here's the gap. Yesterday's close was right here, right up here. Today's open was right down here. And I said the gap has been filled. It hasn't quite been filled, but it will be in just a minute. So this was yesterday's close. This was today's open, right? So that is a gap. We gapped down. Right now, they're trying to pull this up so that they can fill the gap. And when I say they, I mean big money, people that have the money to move the markets. It is my belief that the markets are a bit manipulated by big money. I think it does happen. And so I think that they wanted to fill the gap. In fact, they're about to fill it right now in about 5 points. So that's what I figured we were going for today. And sure enough, we made nice money on this run up because we anticipated that gap fill. All right. Well, that's what I have for you guys today. This was a lot of fun. We took a nice winning trade together. I had some that were already in the works that I won on as well, but we took a 5% win together, and I thought that was a blast. So today, December the 11th, 5% winner, another winner. So far, every single day that we've streamed, we've taken a winner. So join me every day at 9 a.m. Mountain. I will be back again tomorrow. I appreciate you guys. We'll be back and talk to you soon. Bye-bye.